Tesla stock is down over 5% today, even though Elon Musk last night dropped some big news. Elon Musk confirmed last night live on stage that Tesla's FSD unsupervised is on track to launch in Austin, Texas this June. Now, why I even call this big news, it's news we've heard a couple of times before, but it's further reiteration again of the unsupervised, essentially robo-taxi launch that's coming in June. With Tesla stock down so much from all-time highs, it seems like there's doubt in everything. There's doubt about demand for Teslas. There's doubt about the trajectory of the business overall, whether that's AI initiatives or the cheaper, lower priced Tesla. It seems like at these prices, there's a lot of bad news that is baked into Tesla stock. And we'll talk about it, but today it looks like there's more recession fears than anything else. But again, you're still not at a mass fear moment. That is still not happening, even though, again, Tesla's down a lot, Nasdaq's down a lot, S&P's down a lot today as well. In fact, today you hit a brand new low of this correction cycle. It seems like you bounced right at about that 300-day moving average at $548.68 is the technical 300-day moving average. You did hit as low as $546.87, so $2 lower than that, but almost immediately found buyers that stepped in and bought the markets. But we'll talk about that more in just a few moments. But first, we do have to get into all of your Tesla stock breaking news today. And the only bit of real negative news I would say we have today, well, there's actually two things. This is Stifel analyst Stefan Gengaro has lowered his price target on Tesla to $455 per share from $474 per share while maintaining a buy rating. So like, is that bad news? Not from my definition, but it is a technical price target reduction. It says the adjustment reflects a tempered expectation for the company's near-term vehicle deliveries, particularly concerning the new Model Y and the impact of declining favorability among Democrats towards Tesla. Despite the reduced price target, Stifel's stance on Tesla remains positive, with expectations of continued share price volatility in the immediate future. The firm's analysts underscore their confidence in Tesla's medium to long-term potential. And really the fact of the matter is, Tesla down this much, you've priced in a bad Q1. And we talked about this over the weekend, but Tesla stock is priced for a really bad number. I think Tesla's deliveries are probably going to come in around 336,000, actually below analyst consensus. But that doesn't matter for the stock. Again, you've already priced that in. What will move Tesla is if there's any statement from Tesla about why deliveries were low. If Tesla kind of refutes the demand issue and blames it on factories being idled or, the ramp of the Model Y, that would be a positive for Tesla. Because, again, think about this in context to any company ever. Any company can have bad earnings, like completely miss across the board, but give you really good guidance for the next quarter. And 9 times out of 10, that stock's going to go higher. I think that's the question, though. Does Tesla explain coming April 2nd why deliveries are low for Q1 and their expectations for Q2? Or do they kind of just let out the number and let Wall Street wonder? If they let Wall Street wonder, then perhaps that turns into a negative for Tesla stock. But I do think Tesla will provide a statement and give a little bit of clarity on why the number was low. Not that it was a demand problem, but it was more of a supply problem. We can see this via the global inventory numbers that we track often here on this channel. The Model Y is sitting at the lowest global inventories you've ever seen before. Only about 1,200 vehicles are available globally in inventory. That's not a lot. That's sitting down here with the Model S at about 1,100, the Model X at 1,900, the Cybertruck at 2,400, and the Model 3 at 2,800. You're telling me the Cybertruck has double the global inventory as the Model Y, that's insane. And again, it highlights good demand, but a continued ramping story for the new Model Y. And this is your second piece of bad news today. At least 17 Tesla cars were destroyed after a fire broke out at a Tesla showroom in Rome this morning, according to Italian fire officials. No injuries have been reported, and Rome's fire service said it was investigating all avenues. I mean, let's be honest, this was somebody that set these vehicles on fire. Okay, this one seems to be a larger arson attack against Tesla. And really, people are trying to intimidate potential Tesla buyers. And while the US, a lot of those domestic incidents are starting to really slow down as the punishment for them is now a lot higher than it was. But I don't know how Rome handles these kind of incidents. So is it bad news? Sure, it catches the headlines. But is it that important? Not really. Also in the news today, 500,000 Tesla Model Ys have now been built at Giga Berlin. Elon Musk last night also said that, quote, "It's a big deal. Tesla stock is down 50%. Take a listen.
Well, my Tesla stock and the stock of everyone who holds Tesla went roughly in half. I mean, it's a big deal. So not only am I not getting I'm not getting paid, definitely not stealing money, and would never get away with it. But the value of my Tesla stock is in half. So this is a very expensive job, is what I'm saying. But I think it's.
Do you guys see Elon here? Looks like he's throwing the Bears. The bit of the bird here. I just noticed that when I played it back. Yeah. Bosch China executive says Tesla FSD is generationally ahead of competing solutions in China.
In January this year, around the 7th, I test drove the Tesla Sub K in the United States. After the test drive, I was truly amazed. It brought me 3 distinct features: extreme confidence, extreme safety, and extreme comfort. These 3 differentiators are experiences that no domestic manufacturing plan can offer. In my opinion, many people may not necessarily agree with Tesla's end-to-end model. The algorithm level of this end-to-end model is far ahead of all domestic manufacturing.
Gally on X wrote this post that says, "Sometimes I think about the worst case scenario for Tesla in 2030s. Some sort of government mandated breakup, since they are a monopoly, by far the world's largest company. Then I get bullish. IPO spin out of Tesla Cybercab, taxis moving people in FSD licensing, Tesla Semi, Tesla Energy, Tesla Optimus, Tesla Supercharger Network, Tesla Dojo could unlock massive market cap." Elon Musk responds to this and says, "A crazy amount of execution is needed to get there, but I do see a path to the world's biggest company." Take a look at this. In Korea, there are crazy long lines just to get a view of the new Model Y. So much for the demand concerns. I mean, take a look at this. Absolutely incredible. This is coming from Tesla Chan, which lives in Korea. I mean, look at that. Like, insane demand that you're seeing. It's incredible. Here you can see a video of FSD 13.2.8 that this guy says saved his life last night after a driver ran a red light in a complete blind spot on the highway off-ramp. FSD slammed on the brakes and saved him plus his 4 friends from an accident. You could see that, like, there was, I mean, you literally couldn't see that. It was a blind spot, but couldn't see that at all. But FSD picked it up and reacted faster than a human could. That is how good this software is becoming. And there's another report here that a Cybertruck saved a father and daughter after getting hit by a drunk driver that was going 60 miles per hour. The police said, quote, "If you had been in any other vehicle, the car would have flipped and been torn in half." And there's actually minimal damage here to the Cybertruck for a 60-mile-per-hour T-bone. I mean, that's like nothing compared to the damage that you would see in any other vehicle. I mean, relatively unharmed. On the day today, option activity from hedge funds and institutions is a little on the bearish side, but actually quite neutral overall. You have 96 different trades totaling $57.14 million with a positive order value of 42%. So a little bit on the bearish side, but kind of neutral overall, again, considering the stock is down well over 5%. You can also see today you have 648,000 shares that are being covered on. So you're actually continuing to see, as the stock falls, short sellers continue to cover. Now, there has been quite a bit of shorting in recent, the last 2 weeks or so, as Tesla has started to bounce. But now you're really seeing shorts starting to cover again as the stock moves lower. Now, today is interesting from a technical perspective because you're now below your 20-day moving average. You're now below barely your trend line here that connects the peaks from going all the way back to July of 2023. The peak here, the peak in July of 2024, the peak in September, and then right before the election when you kind of peaked out, came back down, and then gapped up above this trend line. So you're now below this a little bit, and 250 is a pretty critical level. At the time of recording this video, the stock is $248.90 or so. It's right below that 250 level. So we want to see what happens into the end of the trading day today. But I will tell you, since the stock is down today, I think the odds of rising after April 2nd go up. So imagine it like this. Today's red. If tomorrow's red, then the odds of a really good Wednesday go up quite a bit. Now, falling, 5.5%, give or take, may set you up for a positive day coming tomorrow. Keep that in mind. But again, generally speaking, it's kind of just the broader markets that are bearish today. The S&P is down about 0.7%, so it is a pretty rough day there. But something like the NASDAQ is down even more. Nasty NASDAQ down 1.6%, completely breaking down to a new level. And the NASDAQ from its prior all-time high is now down about 14.5%. At the low of the day today, you were down about 15.4%. The NASDAQ is getting close to being in a bear market. So it's actually insane how much selling you're seeing today. I mean, it is full-fledged risk off, but not fear, okay? Look at the XLP. Consumer Staples ETF is up 1.5% today. The Momentum ETF is down 1% today. So in really a recession or fear kind of panic, you're going to see everything sell off. XLP rising like this just kind of is highlighting the rotation, right? People are selling tech. They're getting into consumer staples. That's not fear. And unfortunately, until you see everything kind of flush out and sell off, I don't think the correction is over. And this is one big thing that I will continue to point to say we probably have more downside. And that was something I was pointing to, during this first bear market bounce, if you will. That's why I've been so cautious in not actually going out and buying the dip, over the past couple of weeks. It just doesn't make sense to when you're not seeing the signs of a bottom starting to form. It actually looks like there could be quite a bit more downside from here. Even again, keep in mind what I've been saying for the last week or two. You hit a new low today on markets, but guess what? The RSI is at 36.4. There's more room for continued weakness from a relative strength perspective. So that's why you got the bounce in the first place, was because markets were oversold. You got that bounce, you reset momentum, you come back down, hit a new low, but the RSI still has room to move lower. And I think that's the risk heading into this week, as I also shared with you over this weekend, April 2nd is going to be a big day coming on Wednesday with reciprocal tariffs, quote unquote, Liberation Day. It's going to be a big day for, Tesla as well, being its delivery number will be coming out. But what really matters is this Friday's non-farm payrolls report, the unemployment rate, the hard data that we're going to get over the next, week, 5 days, 4 days. That's what's going to be even more important for markets. So it's hard to even look at April 2nd as a meaningful catalyst anymore when people are trying to figure out, are we going into a recession or not? April 2nd, more tariffs come on. That's not a positive. It's just not for the economic outlook. You can also see today, like the VIX, something I've also pointed to, at 22.78. Although we're hitting a new low in this correction, the VIX is down a lot from its highs at 29.5. Okay, that was the high you were at the last low over here on March 13th. But now today you hit a new low and the VIX is only at 22.75. There's not a lot of fear out there. And that's what I'm going off of to kind of judge where we are in this correction. How much fear is there? Are we seeing capitulation? And we're not. So from that perspective, we're not at the low yet. And if we continue to do this, it's going to start looking like 2022. Where you kind of fall, you bounce a little bit, you fall more, you bounce a little bit, but you don't really get that level of real fear until markets are down a lot more. That's kind of the setup that we're starting to be presented. Okay, now CNN's Fear and Greed Index today is sitting at 19, so you are in extreme fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand in extreme fear. And junk bond demand currently in fear. If you take a look at the percent of stocks trading above their 50-day moving average, currently sitting at 23.25. So 3% of stocks are breaking below their 50-day moving average today. It's, pretty rough, but like comparing where you were in 2022, you can get even lower than this. At one point, September of 2022, there was only 9% of stocks above their 50-day moving average. So you could, again, still get materially worse from here. And I think this is a lot less reliable than like the VIX or the RSI and actually predicting where we are in this correction stage. Something else that will be big to watch later this week is what happens coming on Thursday when we get a new AI investor sentiment survey. Okay, the last week's survey, bullish investors jumped from 21.6% to 27.4%. That's not, again, showing a lot of fear. Neutral investor, it is a lot of fear, but relative to where we were at 19, that's better. Okay. Neutral investors climbed from 20.3 to 20.4, and bearish investors fell from 58.1 to 52.2. So again, do investors get super bearish in this week's AI investor sentiment survey, or are they kind of okay with the volatility that we're seeing? Now, here on the day today, this is the last trading day of Q1. So there's a lot of portfolio rebalancing as well. And I think that's part of why momentum is selling off so much today. High beta, high growth stocks are selling off today. And some of your consumer staples are getting bought. That is in and of itself kind of prep for a recession. So you are seeing the recession trade today, but you're not seeing the fear recession trade today, if that makes any sense. Again, in the whole bunker analogy that I used over this weekend, it's like people right now, they're getting their to-go bags ready with their, batteries and food and blankets and all that. But they're not building a bunker yet. Like, we're not there yet. But they're starting to prepare for this recession. Now, Chicago PMIs today came in a little bit better than expected, but they've been negative for what? 2023, they've been negative for a very long time. So it wasn't really a huge catalyst this morning. Dallas Fed Manufacturing Index for March came in at negative 16.3 versus estimates of negative 12. So manufacturing index out of Dallas came in not great, to say the least. And you're really starting to fall lower again. And you're now at almost the lowest levels you've seen in the cycle. The lowest you were at was January of 2024, but you're definitely just nosediving straight down, which again doesn't really add to the confidence of avoiding a recession. Now, coming tomorrow is my birthday, April 1st, if you were curious. We are going to have some important data, ISM manufacturing PMIs, expecting those to dip back into negative territory. They were above 50, which is technically positive last month, but you're expecting that to fall to 49.5. JOLTS job openings for February are not expected to move much, which I think is kind of weird, right? I think you're probably going to get some weakness here. Last month was 7.74 million job openings. You're expecting 7.63 million job openings. So only a decline of about 100,000. But sometimes this can move like a lot, right? You could see a number at 7 million coming tomorrow. And that would be a sign that the labor market and really the economy is continuing to weaken, maybe more than expected, clearly, if that number comes in lower, which is my expectation, which again is not exactly great for the whole recession trade that's starting to be put on. Tomorrow, we will also get the RCM TIPP Economic Optimism Index, expecting that is actually going to get a little bit better from 49.8 last month to 50.1. And surprisingly right now, these surveys have actually been pretty important for the markets. I mean, expectations tend to kind of precede reality. So if people feel bad, the data tends to get bad, if that makes sense. And that's why soft data can be important. Now, the soft data right now is crap, and it's really about the hard data this week. Again, JOLTS job openings is hard data. On Wednesday, you don't have anything for hard data. On Thursday, you have services PMIs, not exactly hard data, but something the markets pay attention to. On Friday is your big data, non-farm payrolls and the unemployment rate, and a speech from Fed Jerome Powell to kind of wrap up this week. And I think that can actually be a huge catalyst as well. So it's kind of like last week where, you know, we had some data throughout the week, but the big data was on Friday. And that's the only thing that really mattered. That's kind of where we are as well this week. We're going to have some data. We're going to have some events on Wednesday, reciprocal tariffs. But does it really matter? Not really. It's about that jobs report and unemployment rate on Friday. But of course, we'll talk about this a little bit more in the next video. Let me know what you think about all of this down below in the comment section. Keep in mind with Tesla, although it is very volatile, I do think we are set up for a positive catalyst coming Wednesday with Tesla's delivery numbers, but not the numbers, the forward kind of guidance, right, for Q2. We're not going to get definitive guidance, but I think Tesla's going to say, hey, demand is solid. The ramping of the Model Y slowed things down, but we've solved those problems and we're getting back to normalization, right? And that is essentially positive forward guidance that should send the stock higher. That's my thought, especially after today's drop. That becomes a little bit more probable. So let me know again what you think about all of this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.